Are able to hear me? If you are able to hear my voice, tell me yes. Are able to hear me? If you are able to hear. No, I'm not speaking right now. We'll start in another 2-3 minutes. All right. So if you have any specific expectations, feel free to type there. I will see if I can cover. I'm actually planning to spend about 1.5 hours today. I think probably will close at about 11:30 or so. And yeah, I mean, I do have definitely some points I want to really share, but if you have anything specific, feel free to ask. And if I know, I will definitely cover. If I do not know, probably we'll do a little later. I think whatever I said is audible. Again, say yes so that I know that voice is working. I think the screen sharing definitely working. I could see in my other test laptop rather tab. All right, that's great. Anyone from Bangalore today? Please explain how you identify change in the trend and after how many candles you confirm. Okay. Yeah, I will mostly keep the recording, but then it all goes with how the session goes, right? So if everything goes well, I'll keep it. But if yeah, depends actually. I can't promise, but as much as possible, try to take notes. That's important. How did you build your capital? Okay. In stock option, I have a doubt. Adjustments in expiry trades. Okay, all right. Okay, I think we are done with the time, and let me close this. So for today, I do not have a PPT, but then let me. Are we good to start 10 o'clock, or do you want me to wait for 5 minutes more? So we got about 30 people joined. So maybe I'll wait for another maybe 5 minutes so that it's easy. So talk about taking adjustments in options. And yeah, of course, yeah, today's session is Nagarajan mainly focused on adjustments only. Uh, how do you take care of? Yeah, I think I will mostly cover this, Suresh, today. Please share how to find trend. Yeah, I'll definitely cover this. And again, see, all these indicators, I wanted to put a disclaimer, right? So they are not like 100% accurate. There's nothing like 100% is going to work. So we'll have to take some 20% risk, and then 80% we need to depend on the indicators. So that's how the life goes. So we'll have to take some risk here and there. So I think let's ask her, Ratimat, how did you build your capital? So it's my capital. So I have been, I mean, of course, I'm in a full-time jobs, right? So full-time jobs. So salary is one of the main source of income, and then the second one is stocks, third is mutual funds, and fourth is options. So that's how I could build a capital. I think a lot of people got confused. I built all my capital using options, which is incorrect. So it's in the same order: salary, stocks, mutual funds, and options. That's how it was done. But anyway, I think the last 1.5 years I have been getting some money from options, but that's not my main source of income. Have you have you explored? Okay. Have you explored? Yeah, I did. In fact, I did. I have my own Python code which I used to run in angel broking earlier, which is probability model using algo. Yeah, it gives some money, but then maybe right now I'm okay to do manual. But then when I do not have time, I will probably get back to algo. But then even when I do manual, I my decision making is predominantly database. So I think like machine only. So that's the reason I'm okay right now. As far as I'm making money, I'll continue. Please share about option shilling strategy. Yeah, I think that is Venkatesh Allada. That is the main intention for today. I think Vidyanand Reddy from Tirupati, I believe. Which year you are active? So I did my first options or futures back in 2014, but then I did not do. I did not continue. I again restarted 2019. Please share your option selling strategy. Yeah, I think Venkatesh, you already asked that. So that is the main intention for today's session. Stock option selling, I do very rarely, Nagarajan, unless, in fact, I did last month, I did straddle for Reliance 3000, which in fact would have given about 3 lakhs, but then I have exited early for about 1.5 lakhs, I think. Let's see what was. So you need to DM me for that. I do not want to talk that in the. Hey, Arpreet Singh, I know you have been a good follower in the Twitter. Thanks for joining from Chandigarh. Hope the life is great there. I have visited Chandigarh just before COVID. Great city. Just dreams. Bro, I am in continuous loss in option buying. Do you think we can make consistent money in option buying or selling? See, there are people who are also making money in option buying, but then I do not want to say one is better than other. But then at least for me, option selling works well. Again, it could be because of my personality and then my ability to take certain decisions. I could never make money on option buying. But then having said that, there are a lot of people who do make money on option buying. So uh, yeah, there is nothing right or wrong in the life. So any of these things, it all goes with our personal expertise. You need to you need to look at what works for you. That's all I can say. Let me put this disclaimer by the time people join. Selling also, I'm scared to see. Okay. Thank you, Devesh. Much appreciated. All the very best. Yeah, I think just dreams in Tamil. I mean, you should not be scared. So I see the again. This is going to be do not take like motivational speech, right? So at the end, I mean, there is money, there is life, and money is not life, right? So you should be able to take some risk. Obviously, I do not expect you to blow up the entire capital, but take some risk, and then at some point of time, you need to pull it back. So, in case if you're not making money, that's all. It's injections, and yeah, we'll talk about those injections, right? So how to handle gamma, I think, is you were talking about injections or the sudden spikes. So I'm not probably going to talk about any of the Greeks today, because a lot of times it might probably people might get confused. But instead of really calling them as Greeks, but I will definitely talk to some extent how do we manage some of those spikes. All right, I think it would be we are about 46 people. Maybe we'll no, I think I do not want to waste your time as well. Right? I thought I'll wait till 50 people, but that's all right. 46 is a good number. Let me start. I think out of 46, I have joined from my own laptop, my own MacBook rather. One more thing. So 45 people, not 46. Know how to make adjustments. All right, that's fine. Okay, let me get back to the session today, right? So before I go ahead, I wanted to read out this disclaimer, and I think Prabhakaran is from. Where do you stay, Prabhakaran? In Bangalore? Answer that, and then I will, as a customary thing, I need to read this out. And the content provided in this video or the live stream is for educational and informational purposes only, and should not be constructed as a financial advice and investment advice, trading advice, or any other advice. The information presented is based on my personal experiences and research, and it does not guarantee any specific results. Trading derivatives, including futures and options and other financial instruments, involves a high level of risk and may not be suitable for all the investors. Before making any investment or the trading decisions, it is important to conduct thorough research and consult with a financial licensed financial advisor or other professional to understand risks involved and to determine if trading derivatives aligns with your individual financial situation and goals. Past performance is not indicative of the future results. The views and opinions expressed in this video are those of the presenter, in this case it's me, and do not necessarily reflect the official policy or position of any agency or the organization. By watching this video or the attending live stream, we acknowledge that you are aware of the risks involved in trading derivatives and agree that the creators of this video or the live stream are not responsible for any losses or the damages resulting from your trading activities. I think that's all. I mean, I know it's a little boring to read this, but that's absolutely all right. Well, so we are about, let me look at, 53 people. I think we are good to start. So what I'm going to cover today, predominantly, I'll start with the positional trades. And I strongly believe not using any simulators to look at adjustments, etc. But then my plan was to, I did a positional trade August end, which I think gave about 6% or 5.5% or 6%, I think. I wanted to quickly take you through some of the major adjustments that I did, and then tell you how I could able to get that money. That's important. Again, August was absolutely okay, but then I'm not 100% sure how. One second, I think I need to take out this one. Yeah. Will I able to repeat it in September? I do not know, but then I'll see. I think mostly it is possible, but I will see. That is something that I'm going to cover. And then a lot of people ask the questions around the linear regression. I'm going to cover that. And then I also want to introduce MACD or MACD, which most of you are aware. And I wanted to really put across my own things around this. And I will also talk about the probability model. Especially this is very useful if you're trying to do positional trades, either it is weekly or monthly expiry. So earlier I had shown the Python program. I did not share the code at this point of time, but I will eventually share because I'm making some changes. But then today what I'll do is I will in fact make you to learn how to do the probability model yourself. As far as you know Excel little bit, I think you should be able to do it. Not a big deal. Again, my intention is to ensure that you will be self-sufficient to take your own decisions, because the moment you try to depend on others, if the others are not available, then you will not be able to really move forward. So I think it's basically intention is to make you a self-sufficient trader who will take your own decisions, take your own calls, and then run your own life, and then with much of a dependency from others. I think that's the main intention of this session and also my future sessions as well. And then I think those are all the few things that I'm going to cover, and then finally I'm going to cover around the adjustments and then the overall very high level, and then the some bit around the risk management. I think that's all. And before I go ahead, some people definitely approached me either through the DMs or whatever, right? So some people, after seeing the PNL that I posted, some people were so excited that, okay, I want to take some loan and then put into options. My absolute request, humble request and ask is to never ever take a loan to put into options, even stocks or mutual funds. It's not worth. um, if you have money which you earn for yourself, I think that you should probably go and invest, but then it is absolutely meaningless to take a loan and then put into an investment. It doesn't make sense. I think the only one time that you can take loan is probably housing loan, because house is obviously a must to live, but otherwise it's not worth to take money out from a loan and then put into options. I happened to read one person in, I think, Hyderabad, or yesterday, he committed suicide. He took loan from Chinese apps, and then he tried to put in option, not option stocks, I think. Eventually lost, and he had put a selfie video, which is I was taken back by that video. I thought I'll give this humble suggestion to all of you. Never ever take loan and put your money into stocks, mutual funds, or any other investment instruments. Ideally, you should earn money and then try to put into stocks. I think that's what which I would suggest. All right. Let me close this. Okay, as I said earlier, I will start with very quickly on the what will be between stop loss. Okay, I'll cover some of those things. Nothing to worry. I'll start with one of the trade that I did, positional trade. This was the one, right? So we started in July 26th, I think, and then ended on August 22nd, which is less than close to about a month. I think a little less than a month, about 4 days less than a month. I think this gave about 1.65 with a capital of about 27 lakhs, and last 2 days I took away 2 lakhs. So right now I think about 27 or 28. That's the money that I have there. I also took a new trade. This is the live trade at this point of time. I'll explain what is the rationale for this trade little later, but right now let me go back and then explain how I have done these adjustments. I think that's important for you to know. Okay, what I'll do is I will also take you through a bit of a Nifty journey, right? So Nifty, I think most of you know. I'll start with 26th actually. 26th, I took this trade in the morning, as you can see here. Let me explain this. So 26th morning, I took the trade, and as soon as I took the trade, it actually there was a massive green candle, which is moved from 24,416 to 24,844. And I think I took 25,500. I think that's what I remembered, the CE side. In fact, that was recorded in the video that I made just before this date. But let me go back here. All right. So here what I did was, because it went quite massively up. So yeah, this one, right? 25,500 CE. It got into losses because obviously when the market goes up, you would lose on the CE side, which happened, which I have to exit this trade. And then this was a hedge that point of time, because there was some money made. I thought I will exit this also. And then obviously PE would make definitely some money. Overall, all this combination, I got into losses of about 29,000. And then I got into some new trades. Right now, I did not remember what are those new trades, but ideally, if I'm here, let me go back here. Well, So ideally, if I have exited, let's say 23,500, I would have probably got into 24,400 or whatever. So if I go back here, so because this has a massive up move, I have moved my PE position from somewhere 23,500 to somewhere here. But then I did not do monthly expiry that point of time. I did 22nd August expiry. The reason is very straightforward, right? So 22nd August expiry will have lot more time decay versus the monthly expiry. That's the reason I took that. But let me again go back to this one, right? So the next one was it was yeah, I think 23,600 PE. That's what. Okay. So this is something I exited the next day, which obviously gave some money. And then this is a null trade. I just exited and then entered by mistake. Now, if I go back here, so when I exited 25,500 CE, I have entered 26,000 CE, which is again monthly expiry. And then what really happened on, now let's look at Friday 2nd. Friday 2nd, what happened? Let's go back to Friday 2nd. So Friday second, here you go. So market actually fell down here. It's I did not make any changes here. Market fell down. That point of time, what would happen is you would lose money on the PE side, but you would gain money on the CE side. So now again, I go back here. On Friday, I exited CE. I'm sure I made some losses on the PE side, but then those are all the notional losses. I did not make any changes. Now coming back to 5th August, I think any of you remember there was a massive fall that day. Our screen is not visible. Is that true for all of you? I could see in my other desk. The screen is not visible for all of you. It's clear. Okay, that's great. Thank you. So yeah, on 5th, what happened? The Japanese issue came in, right? And the market obviously drastically fell down that point of time. And um, then that day, what I did, I have exited obviously. Let me go back here. I have exited CE, which is 25,500 CE, and then made some money, 46,000. So I wish I recorded this, but then I know that on the PE side, PE I was at 24,400. Sorry, 24,000. Somewhere here I was 24,000. Somewhere here. So 24,000, but then this was on the 22nd expiry. So I was in the losses of about 2.5 lakhs there. So I was okay to stay on that. The reason was now the linear regression comes to handy here. So when I go back to linear regression, this is basically close to 91% accurate. 91% there is a correlation. So now this is at the bottom of this. So I thought I will wait till it breaks till 23,738. Then I would take a call. Otherwise, there is no meaning in exiting and then entering again, right? So I did not do that. I did not exit the PE. And then thankfully, this pretty much recovered the next day. Next day, there was some bit of a red candle here, but then there was some recovery definitely. So here I have to take help from linear regression to see whether it is going to fall or not. That's eventually that did not happen. The market did not fall. And then next day, again, I kept on selling the CE. And then this is now I reached to 25,000. And then after that, you got 24,600 CE, which is a lot more closure. This is change the resolution of the screen. Okay, I will probably do for my next maybe I'll increase this to some extent. Is this clear now, at least to some extent? I have zoomed it. All right. And then okay, let me also go back to Nifty now. So for 14th, what happened? Let's go back to 14th. 14th again somewhere here, and then 16th onwards, market started moving up. So when market started moving up, obviously I have sold the. Let's look at 16th. 16th. Okay, it's a tricky day. 16th, what I did was, if I come back here, this PE I have exited with close to 12,000, and then I also have exited some more PE, and then this is all the P's have exited, but then the C I started losing some money. So, but then I just wanted to neutralize everything. So overall that day there was a 37,000 loss that point of time, and then finally on 20th I started selling this PE, and then as you can see, these are all again monthly. If I go back here, these are all again. There is a one second. Yeah, this is a different expiry altogether, and then this is also different expiry. So that's what it is. Probably now at a retrospection, right, it's very difficult for you to follow these trades. But what I will do next time is, at least for this trade, let me go back to this trade. This is a live trade right now. So I have 25,000. Probably I'll go back to Sensible and then see if I can open this. All right. So I made Sensible here. I'll take out this, right? So right now, this is a very straightforward trade. So I have CE side 26,000 CE somewhere here. And then I also have the PE at 23,500 PE. And then this one. So Friday evening, I have added this. The reason, I think most of you know, there is a Powell's meeting. I know that probably there's going to be a rate cut, and that's the reason, rate cut announcement rather. That's the reason I have added the CE. So CE, the expectation is that Monday morning, if there is a gap up, this probably will go. Right now, I bought for, this is a buy option, not a sell option, right? I bought for 1065. I would expect probably it will go to 1100 or probably 1120 or whatever. That point of time, I'll simply exit this, and then I'm sure I'm going to lose some money on the 26,000 CE. But then it probably, the probability of this hitting 26,000 by September end is quite low. That's the reason I'll still hold this. Maybe it will go to 50. That's okay. But then I would actually make money on the P side, which is 23,500. Probably this will go from 50 to maybe it'll go from 50 to 60 or whatever. Or sorry, apologies, it's going to reverse, right? So it's going to be from 50 to 40 or whatever. So that point of time I'll make some money, and then I'll just move 100 points here, not more than that. So I'll go to 23,600 P. That's the plan right now. But let's see if there is a gap up. If there is no gap up, then obviously I will exit this with loss, and then I might probably make some money here, and then some money here. I think that's what I would definitely do. For position trades, how do you manage increase in VIX? See, increase in, I think the VIX, probably you need to understand, right? VIX is basically derivative of the option pricing, not the other way. A lot of times people get confused. When VIX increases, people would think the option price increases, but the other way. When the option prices increases, VIX increases. As I said, VIX is a derivative of the option prices, but option prices are they would change because of the volatility in the market. So apparently, if you go back to Friday, there was definitely there was an increase in the VIX, I think. I can't see here. All right. Chart. I can't see chart here. Okay, here we go. Yeah, if you look at, let me go to 1 day. Yeah, VIX has increased, right? So from 10 to it pretty much went to 13, which is basically about 4.23%. So typically, when you are a seller, you would lose money when you are already in the position the VIX increases, because the premium has increased unnecessarily. But if you're a buyer, you would definitely make money. But then I think this is basically because of the Friday night event in the US. So that's the reason it increased. But I think Monday, ideally, this should come back. I'm not expecting it's going to be increased, right? So you would definitely make money out there. I think that's the plan at this point of time. So these are all the, as I said, these are all the my September trades, and I will, as I said, I'm going to exit this definitely on Monday, irrespective of whatever happens. If it gives money or it doesn't give money, doesn't matter. But then I'm going to exit this. This is mainly I have put for that Powell's event. That's all. I think this is the I think if you go back to the values here, the margin is about 26 lakhs, and I think total margin is about 28. I think that's what it says. And what else? So the probability is about 83%. This particular trade is going to go up. And then now I think this is very important. This now leads us to the probability model I'm going to talk in a moment. So this is basically the break even. It says about 5.6% on the downside, and then about 5% on the upside. So the probability of, let's say, this getting expired in September got to be within that 5% top and then 5% bottom. So as far as that works, and I think this will give us that the percentage or whatever, right? So it's about 9.3 means about, I think probably about 3 to 4% this point of time. But then I will do a lot of adjustments, so that's the reason it will probably give us some money. All right, so now let me also go back to bit around the linear regression, how the rationale for me to take those decisions. So this is basically September expiry, which is 26th September, Thursday. And then as you can see here, the top is about 26,415, and then my position is 26,000 CE. I will also tell you why I took 26,000 instead of 26,500. And then this is the 2 sigma, and this is most probable. Ideally this is going to expire somewhere here, which is 25,633, or otherwise bottom side is about 24,844. So I will again go back to the positions that I took. So bottom side is 23,500 PE, and then the top side is about 26,000 CE. I think that's all. And also, as you can see, the quantities are very different. Here it is 1,500. Here it is 2,250, which is not 1:2, but then I would say 1:1.5, I think, or little more than that. CE side is okay. The reason I take a lot of times more on the CE side, the reason is I also have an underlying portfolio, both in Angel and also in Jiroda. Let's say if the market goes up and it goes to 26,000, I might probably lose on options. That's absolutely all right. But then I would gain massively on the stocks. So I think combination of these two, I'm still okay. That's the reason I tend to take a bit of a risk on the CE side and less risk on the PE side. Now, let's say market falls. What would happen is I'm going to lose on the PE side. Anyway, I'm going to lose on my portfolio, right? So that's the reason. And as the day progresses, as the time progresses, I will, this, as you can see, 2500, right? I will add Monday. In fact, I'm going to add some more positions here when the market actually spikes, hopefully. Then I will probably able to average it out to some extent. And then I'll keep moving this. So now I will reiterate the rationale. So I would have probably taken 26,500, but the premiums are very low. So I took a position somewhere here. The reason is, now Nifty is pretty much all-time high, right? So all-time high is about 25,100. The probability of this is going another 1,000 points is very, very low. Again, this is probability. So or 900 points, very, very low. The reason is there are no results. Results season is over, and then there is no budget event. There is nothing like you will go and then everybody go and then buy the stocks. So that was one reason I did not really go until here, but then I took only till here 25,600. But having said, sorry, 26,000. Having said that, even if it goes from here to here, it's like 100 points, right? So 100 points means close to 4% or 5%, 4%. So 4%, even if I lose on the options, I will gain money on the portfolio. So that's the reason I'm still okay. But when it comes to bottom, I did 23,500. So that is somewhere here, 23,000. Here you go. 23,500. The reason, I think, if you see here, this is where a lot of action happened. This was back in 20th June, and after there was definitely some bit of an up move. So this was the this was the time where the budget was announced, 23rd June, I think, if I remember correctly. Budget date was down, but next year onwards it. So this is where there was some bit of a decision making happened, and then obviously the market has moved up. So I would still consider this is a very strong support zone. That's the reason I took it to 23,500 at this point of time. But do I still stick to that number? Obviously, no. When the market goes up, I will slowly move here. Probably I'll concentrate somewhere here, which is about 24,000 PE, and then probably I'll stay there. That's the plan at this point of time. So my decision making is based on the predominantly the linear regression, and then also bit around the fundamental things around Nifty being already at the top, and then there is some bit of a consolidation happen here. I think those are the two main reasons. And then I also took more positions on CE, mainly because if the market goes up, my portfolio would actually gain, and I might lose some money on options, but that's all right. Those are all the some of the things that went into my mind when I took these positions. So I will take a pause here and then take any questions. So I think Venkatesh Allada, you must be from either Andhra or Telangana, Venkatesh. So how do you select strikes for positional iron condor, like based on delta? So I do not look at the Greeks mostly, because again Greeks are derivatives of the price, right? So are derivatives of the price and then also time. So again, derivative on derivative, I think I felt I'll get confused. See, for me, price is the Bible or Gita or whatever you can consider. So I think my thinking always goes around the price, not even the volume. So this in fact gives us a lot of insights if we're able to read it very carefully. But at this point of time, I do not really spend a lot of time on the Greeks per se at this point of time. All right, so that's about the positional trade. So now what I'll do is I also, when I said this, especially this one, right, this probability, I will quickly tell you how somebody can really calculate the probability. Let me open one Excel sheet for now. So meanwhile, if you have any questions, feel free to ask me. I'm opening an Excel sheet, just to bear with me for a few minutes. Okay, I think I'll have to download again. Just give me a few minutes. How do you make adjustments for iron butterfly? Okay, 1 second. Stop screen. Just give me a few seconds. I need to download something. Well, no, linear regression is not available in Jiroda. It is available in this one. What is this? What is this? Trading View. All right, present share screen and entire screen. All right, so again, as I said, my intention is to make you build these tools yourself, rather than waiting for anybody else to do, right? So this is investing.com, for example. Let me start with monthly, and then let me do, let's say, January. Oops. Apply, download data. So we can also do this for historical data, but let me show my Excel sheet very quickly. All right. So this is the Excel sheet. If you, in fact, you can download you from Yahoo Finance, or you can also download from investing.com. You can also download from which is this NSE site also. So I think only one challenge with this is this actually takes the month on month, which means that it is actually going to calculate from the starting of the last month to this month, which is our expiries. Unfortunately, they're not month on month, right? You will have to do from last Friday to last Friday of the previous month to last Thursday of the current month. I think that is, there is going to be some factor of error here and there. So I actually wrote a Python program, but then today I couldn't run that. That Python program exactly calculates from the last expiry till today's expiry. But right now, it's not required that you need to be 100% accurate, right? So this itself would give you some good insight. So here, if you see, I would assume most of you are familiar with the Excel anyway. So this obviously colors you can put across anyway. It's not a big deal. So except if you really go right, except this particular 23% down, which was obviously, this is the COVID month, right? So predominantly it was like some percentage here and there. So now we had put about 5% there, right? Let's look at a very simple calculation. And then you have, for example, if you take it here, you got about 56 occurrences. If I remove the, let's do face brains. And, all right. Sorry. Okay. So this is very straightforward. So now let's look at the percentage, right? So if you go with the percentage here, so you can see Excel formula here. So look at less than, let's say, 5%. Sorry. Let's pick up some number right there. Okay. So before that, I want to do something. So usually when you do Control Jet, when you do these strangles, right? So you do not know whether the market is going to go up or not. Let's get into absolute change. Absolute change is irrespective whether it goes up or down. You really do not care. There is an Excel formula here. So this is going to really take away either plus or minus. Sorry if it sounds like a very technical session, but I think most of you are in probably working professionals, so I'm sure you would understand what I'm saying. All right. So this absolute change, what it does is it will take away the either positive or negative, and then gives what is absolute, either up or down, really doesn't matter, right? So from here, you can do something. You can actually say that, hey, I want to understand. I do not really care whether it is up or down 5%, but then I want to understand. Give me a probability which is actually less than 5% for it. You can also play around here and there. So let's say, let's go with less than, let's say 4.85%, less than or equal to, we'll put. All right. So this gives us a very good insight. If you can see here, it actually shows 41 out of 56 times Nifty stayed within the less than 4.82 percentage. So this is basically, you can see in the bottom of my screen here at 41 out of 56. Let's do a quick calculation. So this is basically 73% probability. 73%. Suppose now you do not want to even do that, right? So you wanted to probably take 73% may not be good for you. Let's do 5.37. Now if I do 5.37, it actually shows 42. All right, let's stay here, 75%. So now what it says is from the probability model, 75% of the times in the last 56 occurrences, Nifty either it stayed within the 5.27 percentage, either is up or bottom. So now that gives you a good of some bit of an idea around the triangle, how far you can go with the triangle. So now with the triangle, let's say if you do 5% up, 5% down, there is 75% probability that they will make money. And then obviously when you do adjustments here and there, the probability would drastically increase. But then even if you blindly put and then do not do any adjustments, out of 100 times you will make money on the 75% times, and then you will lose money on the 25% times. That's what it is. And 25% times also, it's not that you'll have to lose all 100% money, right? So you will probably, as soon as you hit your stop losses here and there, you would probably quit and then reduce the losses. So that is how this probability model would mostly work. I'll take a pause here, and if some of you are watching this for the first time, you might probably little get confused. I'll take a pause here and then take any questions on this. Let's take Likhit Acharya. Max loss is trade is 53%. If the market opens gap up or go down more than 5%, which is rare, then where is very high. And please explain how do you manage this. I think I said this is a probability model, right, Likhit. So if the market obviously goes 5%, I will be ending up in losses, and then I'll have to take the losses and then exit. I would accept that my strategy did not work. But the probability of market going up on 5% a single day is very, very rare. So, and ideally this kind of strangles you should not be doing when you know that there is an event. At least you know, at least the budget events or any of those things. But however, let's say if there is war kind of situation that nobody knows, let's say on October, I think the second week or first week, October 9th, I think, right? Suddenly there was a Israel, that war came in, and that none of us can actually guess. So some of those things you can't really take into consideration. That point of time, your hedge would save you from not getting into maximum losses, but that is a risk that you need to definitely take. Let me take one more question. So, ATS weblog, you also do call covered for your holding stocks every month, or if you do not have the quantity has completed to lot says okay, little difficult to understand this question, but then yeah, I do sometimes I do covered calls depending on the situation. In fact, covered calls I do on intraday also, mostly, and those were mostly successful most of the days, and some days I lost money, but you can always do them. If you do not have the quantity as compared to lot sizes of, I think that's okay. I think it's not that it got to be exactly matching to that, right? You can approximately put something, and then when the market is falling, and then let's say your portfolio are losing about 2%, even if you gain 1% from options, that's absolutely all right. At least you are better than the most of the people who are not doing options. So that way you will get some satisfaction, but you will not be able to really do 100% recovery of losses. That's absolutely not possible. Suresh Reddy, can you please show the linear regression indicator in trading view? I think I did earlier, but let me show. And I'll go to definitely trading view, but then I want to understand, I want to take any questions if any doubts on this, because this is, as I said, a very easy to use tool, and any of you can really build this kind of things on your own. It's not required for you to buy anything external. All right, so let's go to what Mr. Suresh Reddy asked. Yeah, so this is the linear regression, right? So linear regression, and then there is a Pearson value. You can see here it is 91% correlation, and this is if you're curious to know, this is 100 points. Actually, it goes back to 100 length. If you are very familiar with the data science, you would understand linear regression. It's one of the basic way to forecast what is going to happen in the world. So I personally believe this works, but then each one of us have our own favorite indicators, right? So I usually follow one, and then this is something that I usually believe it gives a lot more accuracy. Okay, that's the any questions on this, Suresh? Any specific thing that you would like to do? Maybe what I'll do is I'll do mid cap, which is a Monday expiry, right? So mid cap Monday expiry, it's obviously this is day trading. If everything goes well, it actually shows that it's going to expire at 13,031. But then Monday, because it's intraday, you can't take day trading as the sorry, you can't take the daily thing, but you can actually take either 15 or 5 or whatever. So when it comes to 15, let me also draw a vertical line here. Oh, I already drew, I think yesterday. Yeah, so it actually shows that it's going to be 13,031 and the top is going to 13,242. Most probably is a 13,139. You can also play around this one. You can see what is happening with the 10 minutes. 10 minutes is 32 and 5 minutes is 79. Okay, this is a little tricky. Okay, 15 minutes is what? Okay, 7. Yeah, I think probably Monday morning some of this. So 5 minutes actually showing a downward trend versus 15 minutes is showing an upward trend. So Monday morning we'll have to really look at what is the most correlated value and then use that value Monday morning. But for now, anyway, Monday I'm not planning to do intraday because I already met my monthly target. So I might probably do some selling of Nifty and then leave it there, either puts or calls, depending on how the market would actually do. But mid cap, I will only do if I'm 100% comfortable. Does linear regression work? Yeah, it does work. Jayant Chatterjee, it does work. And as I said, the only thing is in the day trading, it is very volatile, right? So it might you would not take the linear regression in isolation. You'll have to take MACD or the RSA also into consideration to some extent. That's very important. Otherwise, doing and also day trading, what happens is values change quite drastically. And let's say now 15 minutes, it actually showing 78, right? As the market moves, for example, market started falling down from here to here. The 78 probably will become 0.58 or 0.56, right? So that point of time, we need to discard this and then go to what could be most probable. That point of time, if the market is falling, probably 5 minutes could be most probable. So it is already at 80% right now. So this could be most probable on Monday. Monday, I'm definitely guessing there's going to be some gap up, and then the gap up would be bought in. That's what my initial forecast right now. But then, yeah, anything can happen. Okay, let me take one more question. Gain Theta, can you please do one live trading session on your intraday? It makes much more different to understand, much more different to understand the data points. Yeah, definitely, sir. When I get time, probably. I think I can't spend a complete day currently because of the other commitments, but then I think October, November, maybe I'll be able to do. All right. So Naveen Kumar and Naveen Kumar. How best to use LR for intraday? I think yeah, I mostly use linear regression for intraday, probably 90% of times. And day trading, you also need to look at intraday and also open interest. Open interest, I don't think I need to explain. Most of you are aware. So combination of that and also some bit of MACD and then RSI. I think about 4 or 5 indicators you'll have to constantly look at and then see what works. And yeah, I mean, see, all the indicators are there to, they're like a signal, right? So, but then how do you drive? That's what which matters quite a bit. How do just understand what is the capital? So positional trades I did, as I said, I had shown earlier, right? So I think this is 26 lakhs, I think. But I do some positional trades on Giroda, but then those are all like I have done 1DT or 2DT and I do not want to exit to that extent, but I do not do monthly mostly in Jirodha. Okay, can you guide how to increase capital by option selling? Selling earnings not required for day-to-day life right now, but want to increase capital around 2 to 3 years. And okay, so this is my very simple, right? So whatever you gain from, at least this is what I do. Again, not a recommendation, right? So whatever I gain in options, I usually put into mutual fund SIPs. The reason is the more you trade in options, incrementally you will not be able to see much of a benefit. For example, let's say you have just an argument, right? You got 50 lakhs capital, and then let's say you gained 1 lakh in that month. Now 50 to 51 lakhs is not a big deal, and and so okay, I got distracted with Jane's question, but let me ignore that for now. So let me answer this gentleman's question. ATS weblog, right? So again, this is what which I do. Maybe you can give it a try, not as a suggestion, but then so typically, let's say you start with 50 lakhs capital, and then you gain first month, let's say 1 lakh, second month maybe 1.5 lakhs, third month you lost some money, really doesn't matter. But then at least for an year, ensure that you do trade with that 50 lakhs without getting much of distraction. The reason is once you know how to trade with 50 lakhs, right? So 51 lakhs, 52 lakhs will not make a lot of difference to you, because it's just like 1 or 2 lakhs here and there. So typically what I do is that 1 or 2 lakhs, whatever I make in a month, I would take out that money and then put into mutual funds. And then mutual funds in India typically gives about yeah, okay, let's take it as 5 lakhs. So 5 lakhs, just I mean 5 lakhs I would not suggest to do option selling, but because you asked, I will option selling I would typically say minimum 20 to 25 lakhs. But anyway, respective, let's talk about 5 lakhs. So 5 lakhs, let's say you might probably in a month you might end up making maybe around, if I put let's say 3%, right? Maybe about 20,000 in a month, 3 to 4%. So again, this is not a confirmation. It depends on your strategy. Let's say you are making 20,000 each month. The 20,000, I would expect you to, at the end of the month, move that money to, let's say, mutual funds. And then 20, and also assuming that 20,000 you are going to make every month. So 20 multiplied by 12, which is about how much? 2,40,000. And then by end of the month, if you do a proper SIP, the 2,40,000 might become 3 lakhs. But however, in that particular year, you would only trade with 5 lakhs. The reason, as I said earlier, right? So 5 lakhs versus 5 lakh 20,000, 40,000, it's not massively different. So you might end up losing that money also, whatever you learn, right? So you just keep 5 lakhs as the base, and then you always try to at least keep that base. So now at the end of 1 year, you suddenly got 3 lakhs additional capital because you have invested in the mutual funds. So now year two, you would actually move that 8 lakhs to again as your base. And I'm assuming that you have a one more salary or income to live your own life. You would not use depend on options to really make your day-to-day living. And now in year two you'll have 8 lakhs, right? So again the same strategy, 8 lakhs, again look at let's say 3% or 4%, right? So let's take it as 30,000. Now 30,000 again you do for 12 months, that is 33 lakhs 60,000, and 3 lakhs 60,000 probably will become 5 lakhs if you do mutual funds SIP or the stock SIPs, whatever it is. Now you suddenly get about another 5 lakhs. So now your 8 lakhs will become 13 lakhs. That's how you'll have to grow. But my suggestion is to in a year try to come up with that base capital, and then play around that, right? So I have been using the same capital for about last 1 year or so, though I made some money, but then usually that money I wanted to put into other instruments, not back into options. So that's where you will be able to protect your capital. You would not blow up all the money. That's that one way to do that, but I'm sure each one of us have our own strategies, but this is what which I do typically. All right, so I think that's that answers, I believe, 80s weblog. All right. Okay, I think that's the probability model. And then I also talked about, okay, let's have one more question here. My target is 4.6, 4 to 6 months with the 0.5% daily goal. 2 months before, I faced 2-3% daily losses. And how can I better manage risk and limit losses 1% in case of dot to dot? I think, yeah, the only way that you can do is, I mean, I do also get into losses, not that I'm absolutely perfect trader, right? So I think it's all about reducing those 3% to probably 1%, and then you continue to do 0.5%. What would happen if you have 22 or even 20 trading days, right? So that is about 10%. And then you can afford probably 4% losses technically. But if anything more than that, you would, I mean, if your target is about, let's say, 6%, you can afford probably 1% loss days, maybe 6 days, right? So not more than that. So we'll have to plan it well so that you will not lose out money. When do you start trading, in which year? I think Vidyadhar Reddy, when did you I think I did tell, right? 2019 I started, but then I must tell you 2020 January onwards I've been trading every day without fail. I would take at least one or the other trade. So it really doesn't matter if this is a war day or budget day or election day, doesn't matter. I know I did lose money here and there, but my philosophy is, let's say if you're part of the cricket team, right, you would not be worried whether you have to play with West Indies or Australia or England or Pakistan, Bangladesh, doesn't matter, right? Any team you'll have to play. I know a lot of people would suggest saying that, okay, do not trade on particular date because it's very dangerous. But then until unless you face those dangers, you will not be ready for the unforeseen circumstances. These dangers, as I said, can come any day. It's not like they need to be planned, right? The dangers can come unplanned way also. But if you're able to trade on a planned dangerous day, a risky day, you will be able to face the unplanned risky day. That's my philosophy. Again, not that you need to follow whatever is said, but um, that's what I do. Okay, your learning journey. How do you filter good learning material from many traders online? And so most of my things came, Ravi. We both actually share the same name. So it came from practice, to be honest. You probably, once you learn your basics around how the entire trading revolves around only 2-3 things, right? So there is a CE, there is a PE, there is a price, and then price goes up, PE or CE get impacted. That is as simple as it gets. So now there are only technically there are only three variables, right? There is a price, there is a PE, there is a CE, and uh, and how do you play around these things? I think the way which I do is, let's say, take the analogy of the driving, right? If you are driving a car, you have only 2-3 variables to take care. One is your brake, one is your accelerator, and then obviously you would look at your mirror, which are indicators, right? So our signals or whatever. A good driver versus a bad driver is how well they are able to take the decisions when you are on the drive. Uh, let's say a vehicle comes in front of you, or when you want to, somebody is trying to chase you, or somebody is trying to overtake you. What kind of decisions that you take, and then how fast you want to go, and then how slow you want to go, and then how safe you want to drive. All those things would be definitely make you a good driver. Same thing with the trading also. If you take price as the main thing, everything, as I said, revolves around the price. Now, looking at the price, how do you manage P and then C, either buy or sell, really doesn't matter. I think that's all it goes. So my trading journey, I think there is going to be some full-fledged interview down the line. I'll let you know once that is there, and mostly I'm thinking that's going to be November, December. That point of time I will come on video as well. All right. That's Ravi, and let's hide him for now. His comment. Suresh, I assume your portfolio is 50% debt and equity. What is your... Okay, so this is an interesting. So not really. I have debt only less than, I think, 6%. I think no. I think if I include my EPF, probably that would be less than about 10%. And EPF, I call it as debt only. But remaining thing is on equity. Fine. So I strongly believe on the equity story. And I also will tell you one simple tip, right? So again, not absolutely not a advisory. a lot of times we tend to buy real estate, right? So, but then if you really look at any of the real estate stocks, for example, take Prestige Constructions, it pretty much gave 5 times returns in last 5 years. Versus if you bought a flat in Bangalore, I don't think it would have probably given a 5 times, right? So you would have bought for, let's say, 1 crore or 1.5 crores, you would have maximum gone to about 2 to 3 crores in last 5 years. But then if you have invested in the stock, it would have probably become 5 to 6 crores at this point of time. Okay, that's a simple advice, and then you are doing good work and this knowledge, keep it up, a finger red number. Okay, I but lose all my gains when try option buying. And since again, as I said, I do not do option buying at all, and that is mostly the hedge, except 1 or 2 trades here and there I took. But yeah, as I said, you need to do what works for you. Again, again, if I have to really go back to the sports analogy, right? So there are some people take the Tendulkar is absolutely great with the cover drive versus Dhoni is known for the explosive shots. They both are good players, and Virat Kohli is known for aggressive play. All three are great players. I'm sure Rohit Sharma is good with his sixes, etc. Right? So you need to look at what strikes a good balance with you. There is nothing wrong in buying or selling, but then there are absolutely some great traders who does fantastic buying and also scalping. They are making money, and I tried buying. I never made money, so I felt it doesn't suit to my personality. So that's the reason I did not do buying at all later. Right now, I do stick to what works for me, which is selling. All right. So, do you suggest taking strangles? Next moment, say less than 13. I did not understand Venkatesh your question. What is less than 13? How do you handle overnight risk and positional trades? Okay, so positional trades. See, if you are positional trades, the risk is overnight risk is either known risk or unknown risk. There are only two things, right? So known risk is something that you know that something is going to happen. Let's take this as an example, right? So here I know it's going to be a known risk, which is Powell's meeting is coming, and then I also would think it's positive. So that's the reason I bought this. So what would happen is tomorrow when the Monday when the market goes up, I will probably make some money on the buying position, and then I would probably lose money on the this one. But then I know that it probably will not hit this 26,000, at least with 90% probability, right? So that's the reason I took this position. But then there could be some unknown risks. Unknown risks, what I suggest is if you are absolutely do not want to lose money, typically you can also do, let's say you buy long straddle of December, for instance, just overnight. It's not that you need to buy the same quantity. You need to, if you're operating, let's say 60 lots here, you just buy, let's say 10 lots of long straddle December. Long straddle, I think most of you know, right? So it's basically you buy the same strike price that day's expiry, right? So let's say in case overnight risk, either it can go up or go down, you would actually gain some money from the buying options there. However, obviously, if it goes up, you would make money on the CE. And you will lose money on the PE. If it falls down, you would gain money on the PE and you will lose money on the CE. But at least it will cover you some extent. So the way which that would look like is, let's say I'll get rid of this. So you go on and buy, let's say December. Why I suggested December? There is going to be no time decay. So that's the reason you would actually go on and buy this. So let's say I'll do 10. So now what would happen is, even if some ups and here, right, your portfolio will not have massive impact. That's all. I mean, that is one suggestion that I can give, but then this is the only way that you can probably do the overnight risks, managing overnight risks rather. All right. Any idea about WD GAN methodology and Fibonacci? Fibonacci definitely would work because it's WD GAN. I think my view, it's very seasonal in nature. That's where if you remember the genesis of WD GAN, it actually started from the commodities. My view, commodities are seasonal, stocks are not. But I think a lot of times people are trying to force fit WD again into stocks, which I think may not work. And some stocks are seasonal. Again, no offense there, but I mean, as I said earlier, if some methodology works for you, you should definitely do it. And when I say methodology works, it should work at least 80 to 85% of the times. If it is working, then obviously it is right. If it is not working, then you need to discard and then move to something which is a lot more meaningful. Do you suggest striking? Oh no, Wix. No, I think so. Wix. Nothing like that. I mean, I very rarely look at the Wix, but you can do strangles any day. It's not going to hurt us. What percentage return should we aim for? Directional option sellers on a monthly basis. If we achieve the target 1 or 2 weeks, how should we handle the remaining days of month? Take rest, go to some nice holiday place like Goa, and then enjoy your rest of the life. Jokes apart, my suggestion is if you already reached the target, let's say put across 3% there, right? So let's say 3 or 4%. Ideally, you should take rest. Maybe you want to do next month expiry and then keep quiet. Sometimes even I burned my hands last week, right? So I would have taken rest, but then I did trade. I did lose some money. So take that point of time, take some safest trades. Can you how to use ATR indicator? I do not follow much, so I can't help you on that. Your future plans in terms of taking the sessions and the trading for us, Monica. So I do not know. I'm actually working on a startup idea. So depending on the time that I have, so trading I still consider as more of a passive income, not like my main source of income, right? So if I get money, that's great. If I do not get money, also I'm fine. But I definitely working on some startups. So I will take maybe I'll end up charging some money down the line. Let's see. Right. Can you please tell some time of adjustments during the different scenario? I think this probably would be appropriate when I do a live trading, because right now if I say it will become like a theory. Also, in the positional trades, what I'll do is for September, I will probably record the video as and when I do the adjustment, and then I will actually post that video once in a week. That way, I think it will be easy for most of it to understand what is my idea and then why I did that particular change. Otherwise, even if I do not do that, I think I'll mostly forget what's happening there, right? So all right, I think I answered a lot of questions and all. Oh my god, time is about 11:13. I did not realize. So let me get back to my content again. I think that's important. Okay. Okay, let me answer this question. If X is low below 13, less premium expert, prices to fluctuate in the range next 30 days. If expiry premium. See, VIX is, as I said, right? So it's a volatility based on volatility. So you, again, volatility is nobody knows, right? What's going to happen tomorrow. So this can change here and there. Yeah, if it is around less than 13 or 10, which means that it is low premium, but that is also good, right? So if you have high quantity selling, you would there is a most probability that you're going to make money. So that's where it is going to be a lot more easier there. Absolute change. Okay, absolute change. Anjali, 1 second. Oh, I did not understand that. Let me go back to Excel sheet then. All right. So see, absolute change is very straightforward, right? Whether it is minus or plus, I think you would have probably learned in your probably 5th standard or 6th standard some of these mathematics, right? So absolute change is whether it is plus or minus, it always shows plus. That's all. So suppose here it's minus 5.1, it actually showed 5.1. Here it's 3.92. It actually showed the 3.92. Here it is minus 0.33. It actually showed 0.33. That's absolute change. The reason absolute change is important when you're doing this probability model, right? You do not know whether the market is going to go up or down. So you would actually take it, it is going to be in the range of that percentage, 5% or whatever. So that's the reason you take that range. Let's say you take 6% range. So now, okay, 1 second. Let's say less than or equal to, you take, let's say 6.36. It actually shows you got 44 occurrences out of 56, which is basically you do equal to 44 out of 56, and you got about a close to 80% probability there. What it means is there is 80% probability that Nifty will not go above 6.5%, will not go down 6.5%. That's what it is. If the market moves, yeah, market is always based on the components, right? So usually the I think most of HDFC got the highest percentage, and after that you got Reliance, and then you have InfTCS in the same order. Index moves based on the movement of the components. How does the market sometimes become sideways and creating opportunity? Yeah. So what would happen is it's a bit of a psychological thing, right? So when somebody, usually what happens is there is a sector rotation. Sometimes the banking sector would move, sometimes oil sector, which is Reliance, or the telephone, right? So sometimes IT sector will move. It is very rare that all the sectors would move in the same direction on single day. There are definitely some days, but then that's how there is index. That's the beauty of index, right? So there is not going to be massive ups or downs, but then it is probably would stay at some range. Can I ask it out in the options? Option selling probably will do cover towards the end, and Nagarajan will come back there. All right. So I think I wanted to cover a couple of things, right? I said that I will do probability, which I just did. Are you guys interested in MACD right now, or you wanted me to answer your questions? Your call. So we are left with another 15 minutes or 20 minutes. I can probably spend time until 11:45. There are two choices that you have. You can probably write your opinion. MACD want me to cover, or you want me to take your questions? So we got MACD by Venkatesh. Okay, let's go to MACD. All right, let me open it. Okay. I got it. So we'll do MACD, no problem. RSA is very straightforward. So MACD is a very beautiful indicator. Let me, however, start with the basics. RSA is straightforward, so let's not spend. In fact, MACD and RSA you can use. So first, let me show you indicator alone. Do you want me to pick up Nifty or anything else? I'll pick up Nifty just for the. All right, so we are in the Nifty. Okay, so this is MACD here. MACD got multiple components. Let me reload. All right, so this is MACD for you. Let me expand this. All right, so you got multiple components. Right? If you go back to the indicator settings, so you got fast lane, which is 12 moving average. You have the slow length, which is 26 moving average, and then source is obviously the closing price. You have the signal smoothing. You can change this if you wish to. You have two options here: EMA, SMA. EMA, SMA stands for simple moving average, and then EMA stands for exponential moving average. I usually prefer SMA. And then these are all the settings, and some people suggest you can go to 9 here, 21 here. It's up to you, but then this is the standard one. and you can leave it there. And then these are all the standard variables that you can really look at, and then the visibility is this much. So I'm not changing anything. These are all the default settings in the MACD. So now it is important for you to understand how it is calculated, so that you would appreciate the let me show my Excel sheet. So very similar to the previous one, I have downloaded the data. One second. All right. Okay. So this is Nifty for last how many days? Last 1 year, and bottom you will see the latest data. So what it says is there are two moving averages, right? There is a 12 moving average. There is a 26 moving average. So now 12 moving average, let's say these are all the, let's say this is 13th day, right? So here you would do average. So good news is none of you need to calculate this, but I thought I will explain this, how it is getting calculated, right? That's where it is very important. So you would actually drag this. All right, so it gave you some numbers. These are all the moving averages last 12 days or whatever. So as the day progresses, it will pick up the other one. So now so here we started 36. So 26 moving average will start from 27. Same thing. Very simple Excel formula. All right. So now you got this Excel formula. Okay. So now this is a 12 moving average. This is the 26 moving average, and you can always change whatever works for you. But usually this is the standard. So MACD is actually the difference between these two. So right now, if you really look at this, right, it's very difficult for you to, let me try a graph maybe. So there are two lines, which is very difficult to, Control Z, very difficult to read here. 1 second. $26,000. All right. Okay, now you can see the values. So this is the one is 12 moving average and the other is 26 moving average. This is what which you can see in trading view also. Same calculations, no rocket science there. But then it's very difficult to know what's happening, right? So now MACD signal is basically the difference between these two. So you can only, I do not have the past data, so we'll start from here. And all right. So now, as you can see here, right? So there are some places where it went to, probably this chart I do not need here. I thought I'll just put that just as a reference. We'll come back to that. All right. So if you see here, right? So what is happening is this value is getting changed here and there. So let me put some colors to this one. All right. Oops. Okay. This will give you some bit of a sense around what is happening. So now if you really look at this, right? So this gives you some good sense. So let's say here, this is a tipping point here. This is where it actually shows that it actually moved from, let's say, pretty much green to or blue here, blue to red, or maybe if you take some other scenario where there is a drastically change. Okay, so okay, here you go. Let's say this is 11th. 17th November. Let's go back to 7th. So 17th November, obviously, if you really look at this one, right, there is it moved from red to kind of a green or blue. In this case, it is blue, but then you can take it as green. Let's go back to 17th of November in the trading view and then see what happened that day. Let's go to trading view. Imagine that you do not have MACD, for example. So 17th of November, 17th of November. Last year, right? Here you go. So this is where there is some bit of a turnaround here, and these values for now do not go back to my calculation. My calculation would be a little different. So here what happened was 17th November. It actually giving a signal saying that from here onwards there is a positive move, which actually definitely did happen. And then after that there is a quite a bit of a massive move here, right? So and then if I go back to my Excel sheet again. Not this one. That is one date that I remember, and then you also have the this is one date where there is some bit of a reversal, which is 12th of August. 12th of August. Let's also look at 12th of August once. Sorry. 12th of August. Yeah, 12th of August also there was a definitely some bit of a reversal there. So so this is how you calculate the MACD from the Excel. But thankfully, it's not required for you to use Excel, right? So you have the indicator already there in the trading view. Let's look at the indicator. So when it comes to this indicator, as I said earlier, there are only three values that you need to look at. One is the fast length, which is 12, slow length, which is 20. This is the moving average. Yeah, the signal smoothing is about 9, and then you have obviously MACD calculated automatically. You have the histogram. Apologies, not Instagram, histogram. So now let's look at this histogram, right? So usually this is called one second, signal. If we go to style, signal is white. Yeah, I think let's stay as white for now, or you can change to. I think let's stay it as white. So the signal actually gives saying that whether it is going to be bullish or bearish. So here, if you can see here, right? So while it actually gave little early, so the green line, which is a smoothing line, the signal actually tried to cross that. It actually showing a bearish signal, and also on the histogram side, there is a lot of red. So here, ideally, if somebody sold the thing, right? So while there was some up move here and there, but then eventually there is a down move here, people would have ideally exited, and then the signal actually broke here. This is probably may not be the great example to entry and exit, but then this would give you some good sense of how the market breadth and then the breadth is there today. So for example, today as of Friday, there is a green signal here, which actually showing that there is going to be some bit of a bullishness. That's how you need to look at the MACD and then take the call. But generally, it is always advisable that you would not take MACD alone, right? You will also need to look at the RSI, which I think some of you already suggested. Let's look at RSI once. RSI usually if anything above this 80, or here it was written as 70, but usually anything above 80 is considered as overbought, and anything below 30 is considered as oversold, or 20 also. It again depends on the stocks or the index or whatever. Index, you can say anything above 70, say that there is going to be oversold, and then it's going to be overbought, rather it's going to be pulled back. So take this case, right? So maybe take this case. While this actually gave a signal, but then here technically it is not a oversold. So oversold actually happened here. If you can see the signal here. So ideally now MACD gave a signal saying that hey, this is going to be a bearish move, and also RSI gave a signal saying that this is obviously a oversold region. This is the place where you need to sell off. So now you need to also look at one more indicator, which is the linear regression. The linear regression also showing that this is at the top of this 2 standard deviation. Maybe ideally you should probably sell off here. That is those are the 3 indicators that are actually saying the same thing. That point of time you would actually go and then probably sell CE. Not necessarily here. Maybe you take some factor of safety and then go and then do the CE selling here. So and then same thing with the bottom also, right? So now let's say here it is actually showing that there is a reversal signal in the MACD, but however our this one is not confirming at this point of time. Ideally if somewhere here we would have said that okay, go and then do some sell put options here. But right now if you take the RSI is actually not in the oversold. It is somewhere in the flattish region. And then this is actually giving a signal saying that buy. So there is a now mixed signal, right? So there is going to be high probability that the market going to be flat also in the next couple of days until there is a good signal. So now when it is a every indicator is showing something little bit a different thing, you may want to simply do a triangle and then leave it there. And then once you get a confirmation, you may want to either take a call on the selling the P or selling the put or buying P or buying put. That's how you'll have to really do that. So that is the MACD for you. And the Excel sheet I showed mainly that you have ways to calculate, but then not that you need to go on and sit do a number crunching there. It's not absolutely required. But you can always use any of those indicators. But then once you know how to calculate, you would probably understand what is the significance of these indicators. How do you use MACD for positional? Positional you can definitely use. As I said, this is actually MACD right now gave a green signal, and then this is actually showing bit of a flattish thing, and RS is also showing bit of a flattish thing, right? So I would probably do a triangle and then leave it there. Only thing is I will not get panicked in case of the market moves here and there, because the signals are very mixed in nature. Positional trade is one of a little tricky. Positional trade, what happens is positional trade doesn't work on the psychology and the fundamentals. Not positional trade, apologies, I'll change the word. Intraday trade, right? Intraday trade doesn't work on the psychology and then the indicators, because intraday there is a lot of manipulation happens, right? So I think if any of you doing intraday, you would know suddenly there would be some spike and you do not know what is happening. But intraday I suggest to not to, I mean, you can use MSCD as an indicator, but then it's not accurate most of the times, because let's say you are here intraday, this 15 minutes candle, right? Let's go to 5 minutes. Yeah. Let's say got 5 minutes candle. Suddenly you can see, maybe I'll show the Sensex was quite volatile on Sunday. Sorry, not Sunday, Friday. Yeah. Suppose if you take these candles, right? So this is 5 minutes candle, and I was on this trade on Friday, so I was seeing all these candles, and then so you take this candle just for the argument's sake. Maybe I'll put 15 minutes here. Yeah, this candle you take, right? So this candle, when you take from the MACD perspective, it is still green, but then this candle, if somebody had put the stop loss, they get panicked. And also RS is actually showing oversold, oversold here, which is because it's pretty much peak here. But then let's look at this candle actually saying that there's going to be some bit of a correction, but then it pretty much stayed in the green. And RSI doesn't communicate anything. RSI actually says that it's flattish day. And yeah, this also linear regression also doesn't really communicate, except saying that okay, this is actually reached the most probable line. Yeah, so intraday is quite difficult and confusing. Intraday, I would say most of the indicators doesn't work, but you'll have to go with some bit of a probability and conviction. But positional trade, I agree absolutely. All right. So Malik Arjun, let's answer your questions. Do you take a trade based on the call or put ratio spreads? No, ratio spreads. Yeah. Same expiry. Yes, I do. I do ratio spreads. Absolutely. For weekly options, can I use 1 hour chart? Yeah, you can use 1 hour chart, 15 minutes chart. Really doesn't matter. Yeah, you can use 1 hour chart. 1 hour chart for let's say Nifty. Yeah, it looks good. 1 hour chart actually shows a bit of a bearishness. Daily chart for monthly. Yeah, daily chart for monthly. Monthly also you can use hourly chart. It's up to you. There is nothing wrong in it. Okay. Now I think Mr. Nagarajan asked a question around stock. Okay. See, stocks I suggest do based on the open interest. That's probably my view is the better way to tackle stocks. Suppose if I take Reliance, right? Sorry, open interest. If you take Reliance, so Reliance for 29th expiry, no brainer. It actually shows that the highest is obviously 3000. Suppose somebody does a straddle, let's do a straddle straight away. I'm not suggesting that you should go on and do a straddle, but I'm just saying. In fact, I had this straddle starting of the month, but I have exited a little later. So if you take simple straddle, and then probably I would never do without a hedge. So let's do some hedge. All right. If you take this simple, I think this is called iron butterfly from the nomenclature perspective. So if you take this one, right, so probability is about 58%, and then the margin is only 65,000, and then if your everything goes well, you get about 16%. If you get into losses, you lose about 14,000, which is close to 20%, I think. Yeah, around that. It's 1.4 is the risk reward ratio. Suppose if you simply do this strategy. So now the advantage of this is there is a definitely massive support, massive resistance at 3000. The probability of this going above is low, and then there is also massive put support here. So I think this will probably hover around, and also you have 1.4, 1.4 up or down. So you can give it a try and then see how it goes. And stock option selling, how to capture IV delta while selling either. Yeah, as I said, I do not really look at Greeks for now. I used to do, but then I felt they are, as I said, they are derivatives of the price movement anyway. So again, derivative on derivative, my view is a little tricky. Even if you look at the price and then the open interested, you'll be able to take the call. Suppose let's say take the case of Reliance again, right? So you do not want to take any risk, and then let's say you go here. Open interest is obviously here it is top highest, and here it is the next one. You simply go on and do a covered call, and then you are still good. Covered call, let's say you do a covered call or simply call, right? So 31,000, and then you do here, not a big quantity, but then you would make some money. It's about 2%. It expires next month anyway. So, and then let's see how you have 5 lakhs. So 5 lakhs capital. I think somebody's saying they got 5 lakhs capital. I think 1 week 8,000 is obviously absolutely all right. So you would still make money. The reason is if Reliance has to travel from here to here, you got one big obstacle here. There is second, there is third, there is fourth. This is negligible. There is fifth one, and also here onward there are negligible puts were written. So the probability of this is breaking is very low, and then this is 93% probability. 2% in a week, my view is a massive money. And yeah, these are all stocks also gives a lot of great opportunities for you to go on and do the selling. So and Sai Tejeshwar Reddy, how to start options. So my suggestion is Sai not to do option selling with 5 lakhs capital. That's my request. The reason is if option selling, if it goes wrong, you would lose massively, and then it would wipe out your entire capital. Ideally, I would suggest if you have 20 to 25 lakhs capital, you would start with about 10 lakhs capital, putting the 10 lakhs, and then you try to make some money here and there. So as I said, the 10 lakhs, even if you make about, let's say 3%, just for the argument's sake, right? So that would give you about 30,000 each month. And then that's my view is a massive money. And eventually when you build capital, you should go on and do it. But 5 lakhs, one bad day you would end up losing. Let's say if you end up losing about 1 lakh, it's definitely it's going to hurt you. But on 20 lakhs, if you lose 1 lakh, still you are okay, right? You are left with another 19 lakhs. So that way it is a lot more easy. Okay, so Janit, you are in absolutely in a great position, right? If you have 25 lakhs equity, you would ideally, I would suggest to do a covered call and then enjoy life. There is nothing that you need to do. So covered call is this one, whatever I shared. You simply do and then see if you have 250 stocks, right? If Reliance goes from here to here, you would make 100 rupees each stock, which is 100 multiplied by 250, which is how much it does? 2 lakhs 50,000. You would make that money and also you'll make this money. So you are covered on both the sides. And then okay, I think we have a lot of questions from Samir Mathan. Assume all components are sideways and causing the index to be flat. If short covering triggers and the C side gets hit, should the index move up even if the components? Yeah, it's difficult to understand your question to me. Leaps are not very famous in India, but then they are quite famous in US. Leaps are very long options, right? You would probably go on then buy. Let's take it as Nifty. Go on then probably do, let's say, Nifty, and then let's say 2026, and then you go on then let's say let's do 2025, right? So you go on and sell some option here. This is put. Let's do call option. That's all. This is leaps. So this gives you for a capital of margin of 1.3, it gives about 30%, but then you obviously need to wait till 2025. That's the thing. I would always advise you to buy a hedge here. So this is the leaps for you. So you would actually put for 5 lakhs and then wait till to the December 2025, and then if Nifty doesn't cross 27,000, you would make 2 lakhs. If it crosses, you will lose 2 lakhs. That's all. But then if you have a good portfolio, I think you were still at the better off, so you would still make money. All right, I think I covered pretty much what I wanted to do. MACD, probability model I covered, linear regression I covered, and I think that's all the content from my end. And we can also hedge and forward the losses. Say forward the losses, there is nothing like forward the losses, right? You can exit and then probably do next year options, but otherwise there's nothing like automatically forward. You need to exit the options and then do it. All right, so as I said, I'm done with the content, but I will probably take some questions, and it's not required for me to share the screen anymore. I will unshare the screen. I'll take the questions now. Shiva CH, and how do you manage triangle and when there is a huge unexpected directional move and after making adjustment there is a V-shaped recovery? So as I said, Shiva, so this is where your indicators would come into picture, and also some bit of a hedging that you need to do, right? So hedging ideally should save you from not getting into maximum losses. So I strongly suggest whenever you do straddles or strangles, you always have the hedge 100%. So sometimes, let's say if you are doubtful, I would even expect you to have more hedges compared to your, for example, if you're selling 100 lots, right? So you may have a hedge for, let's say, 150, just for the safety. The more hedges you have, the more losses you will have. But then at the end of the day, you need to optimize your returns. The moment you put more hedges, you would also not get a lot of money. So it's basically hedge is like when you're traveling on a bike, right? Buying a helmet, that's a hedge for you. So would you put 3-4 helmets? Obviously no, right? So it might protect you, but then you will also need to spend money. Same thing here. So somewhere you need to optimize your returns also. Hourly, so let's put what Tyagarajan sir is saying. Hourly and monthly chart, MACD and RSI give different signal. How do you? Yeah, this is what I said, right? So when there are the different signals, there is no clear direction. Personally, I would think that it's going to be a bit of a flattish move until unless you get a direction. So nothing that you need to worry. As a follow-up to my question, what strikes, Janit, as a follow-up to my question, what strikes, how far from ATM works best in your experience, and also do you hedge? See, I think I'll have to segregate this into monthly, weekly, and then daily, right? So, yeah, daily, usually when I did CE only sometime in May. So usually I go 1% up and then do the day trading, and most of the times it worked, except one or two days it definitely impacted. But then I think last session, not last week, I had shown the this one, right, the probability model for the daily expiries. So I wrote a Python program, so that would actually give, if I had to do 80% probability, how far I can go. So generally in daily, if you go 1% up, and then let me show the one live example here, or maybe 1 second. All right, so suppose if you take Monday, it's a strategy builder. Monday is mid cap nifty expiry, right? So mid cap nifty right now 12,961. Just for the argument's sake, let's say it goes, so Monday it is a gap up, just for the argument's sake. Monday, if it is a gap up, let's say it actually shows about 12,000. It opens at about 12,000, 13,050. Now you go 1% up, and then 1% up is almost like 130.7, right? So, and the market opened here. You go here 1%. Market, let's open here. So you go to 13,300 and then sell the call option. And then obviously need to buy some hedge here, maybe here. Stay on this. I think mostly you will be successful, and then obviously Monday these numbers would change a little bit here and there. So typically from the opening I would take 1% away, but I think one challenge is when it is a gap down, some of these numbers will not work. Usually when there is a gap down, there is going to be recovery. So that point of time I would not suggest you to do CE only, but then when it is a gap up, you can take that risk and then do. But again, as I said earlier, these are all like they would work 80% of the times, and 20% of times it can break you quite badly. So you need to put some stop losses and then exit appropriately. So Jade Lizard adjustment, if 1%, yeah, we can definitely do that. I think there is a Jade Lizard and there is a Twisted Sister opposite each other. Yeah, you can do whatever works for you. Nothing wrong in it. All right, so can you please throw some light on intraday short straddle? And okay, so intraday short straddle I would not suggest. It's going to be quite dangerous. I would suggest short strangle and intraday. Again, this is my personal experience. Short straddle, the probability of you making money is probably 30 to 40%. The remaining 80% you would do. But even then, when you're doing a short straddle, I suggest you to do immediate hedges, so that you will have the, okay, to answer your question, right? Let's say, imagine that mid cap nifty opens wherever it closed today. Let's say that 12,961, right? Ideally, I would suggest you to do short triangle here, but then you need to have the immediate hedges. Otherwise, you would get into massive losses. That's all. So this gives you, if your strategy works well, you get, this is like my view, technically hero zero trade, right? So if your strategy works well, you get about 1,000. If it doesn't work well, you lose 200 rupees, not much. So you should be able to, and also risk reward is absolutely negligible. So ideally, as I said, I would not suggest you to do straddles on an intraday. Let's take one more question, and then Pawn Prabhu Pawn Prabhu D. Given your success in option selling, why do you still diversify into equity and debt? And is there a specific reason? And so, as I said, I mean, first of all, thanks for saying that I'm successful. I personally believe I'm not completely successful. I do lose money here and there, right? So, see, there is again, I'll talk about a bit of a life philosophy, right? So, see, we are here to live on earth, right? So there is going to be not all the things we need to put into, we can afford to put into one single one. So there got to be some base. If let's say if I lose 1 or 2 crores, for example, just for the argument's sake, right? I still need to live. I still need to survive. So there is always some money that we need to keep as a base, which you will never touch. So I have certain base there. Let's say if I have, just for the argument's sake, if I have, let's say, 1 crore. So out of 1 crore, I would keep maybe 50%, which I will never touch, because obviously there is a family, they need to survive and I need to survive. Even whatever happens, I will not touch that. That 50% will be there always. So the remaining 50%, maybe 30% you can put into stocks and mutual funds, and the remaining 20% you can play with options. So now what happens is, in options, even if I lose that 20%, I'm still left with about 80%. So I'm still okay. There is nothing I'm going to go on and hit. So because options, what happens is the risk reward is quite difficult, right? So anything can happen on any day. You will never know. Even on a, for example, July 12th, July 12th, this one, BSC stopped working, right? So you have all your best intentions, best strategy, best indicator, but then the BSC doesn't work. Then what you will do? You can't do anything. So I lost money. So some of those things you will have to take into consideration. So never put all the money into one single basket. So that's important. Okay. How to adjust inverse triangle? I do not. I think you meant probably long triangle. I'm not sure. How do you directional selling in 0DT? Yeah, as I said, directional selling, you will have to do either CU only or PU only. Again, you need to be 100% sure on the direction. That's very important. Covered call strategy, good, it seems. Yeah, covered call is always good. So it's my view. I would say covered call is like a, people say compounding the eighth wonder, right? Covered call is the ninth wonder. You will mostly make money. So Tanjil Kolkata vlog in Nifty strike price is best for option selling for next to next week in I did not understand your question. In Nifty strike price is best for option selling. I did not understand your question, so I'll have to skip that. Okay, all right. I think that's all I could cover today. As I said, I did cover the positional trade adjustments, and then linear regression, and then MACD, and then bit on the probability model. So probability model, as I said, you can always build your own thing. And if you want to do, let's say, what's going to happen 15 minutes and 1 hour, you can just download the data and then do whatever works for you. You can build your own thing. So that way it will be a lot more easy. Okay, so can you explain? Covered call strategy I did already, right? So let me explain again, just for the. So covered call strategy, the first thing is, it would assume that you are owning the share. I think I think one of you said that you own Zenith. I think you said that you owns 250 Reliance shares. So now when you own 250 Reliance shares, right? So technically what to do is, let's go to Reliance here. So covered call assumes that you have the underlying in this case is Reliance, and then because you already own the shares here, right? So same quantity as we are doing the covered call. So you go and then do sell, let's say, and then you would think that the Reliance is not going to go above 3040, or you might also think that Reliance is going to fall. One of those assumptions. So then you would simply go and then sell this 3040, and then obviously buy hedge, and then just leave it there, and then you can obviously increase the lots if you wish to. And yeah, so this is not when I say increase the lots, right, this is not like 1:1 compared to your what you own and then what you get here. So the reason I had increased the lots was, let's say if Reliance goes up, still he would make money on the stock holdings, but he would lose on the options, but that's all right. So here it's the maximum loss is only 1.31 when it reaches 31,000. But then when you're holding 2,500 Reliance stocks, let's do a calculation simply. 250 multiplied by, let's say, 100. How much is that? It's 2,000, 25,000. Sorry, not earlier I said 25 lakhs. So sorry, 2 lakhs 5,000, 2 lakhs 50,000, which is not right. It's just 25,000. So in this particular scenario, if it goes here, you would gain 25,000 from your stock, but then you would lose 1.31. But however, if you have just one lot, it's a lot more meaningful, right? Here you would lose 13,000, but you would actually gain 25,000 from your stock holdings. So overall, you are in the profit. So that's how you would actually take this into consideration. So, Samir Nathan, do you offer any courses? Any? No, I do not offer any courses, Samir. YouTube Live is the only course, so you can watch as many times as you want. This is all free. I think I know my first tweet. I said that a lot of times we do not appreciate free things in the life, right? Free things in the world. We always want to pay money and then learn. But anyway, there are a lot of free things available where you can. In fact, the reason I started as a free because I learned a lot of my sources are free. So I just wanted to give back free for now. Maybe if I quit my full time job, I wanted to earn some money. That's a different thing. But right now, I'm okay. So I'm earning good money. So I'm fine with that. Thanks for teaching us. Learned a lot. Also, I say you are an honest person. God bless you. Thank you so much, Tyagarajan. Can you share your most preferred selling? Yeah, my most preferred selling strategy, MVP trader, is strangle and covered call or CE only. Those are the two things that I do, and I think I do reasonably good. I mean, there are obviously days I lost money, but keeping those aside, I think it's you will make money easily. So not you will not get into a lot of stress. Sham, yes, thank you. Seems to be genuine trader. Yeah, I did definitely a lot of mistakes, Sham. So as I said, right. So 2020 January end onwards, I'm trading pretty much daily without missing a single day. So I had COVID. I think probably 2 3 days, but that time also I did 1 or 2 trades. So yeah. So my view, I think the trading daily gave me quite a bit of insights into what is happening in the market. There were the days I lost money, but I'm okay. I have confidence that I'm going to recover, so that's absolutely all right. So if you don't mind, your age, please, where are you from? That's all right. So I'm as young as you, I'm as old as you, so don't worry. So I had grown up in predominantly in Andhra Pradesh, and I studied in, if you're familiar with AP, I studied in Bapatla Engineering College. I also studied in SV University campus, Tirupati. I did my MTech there, and then I moved to Bangalore many years ago, and then I kind of settled in Bangalore, Tyagarajan, if that helps you. Uh, Kotesh. No, I am not from Hyderabad. I am from Andhra Pradesh. But I worked in Hyderabad for about 4 years. So I'm absolutely familiar with Hyderabad. And I have a lot of relatives in Hyderabad. I do travel there quite regularly. Do you keep any routine when trading, like eat? Oh, okay. Shames. So I do not keep any specific routine, but I wish a specific food can give you returns, but that's not true. So I am a fitness enthusiast. I go to cult. I've been going from 2017. I do yoga quite a bit. Again, nothing to do with trading. This is just for to keep me. In fact, today morning also went from 7 to 8. So I love yoga. If you wanted to really be healthy and fit, happy, you should definitely pick it up. I am also certified yoga teacher. I do not teach right now, but I do enjoy yoga. So I play badminton quite professionally. But then recently I did not. I stopped playing. I think from March or so, where I had injury, so I stopped playing and. Otherwise, yeah, I enjoy my life. So I do painting, and I won some prizes at state level and national level. But I do paint once in a year right now. So please conduct session. No, daily it's not possible right now. And then where can we reach you? Yeah, you can always ping me on this one. Twitter DM is the best thing. Just that do not ask me for money or anything else, but knowledge I can definitely share. But money I did not want. The reason is money, my view, each one of us have the capability to earn. and so you should go on then. But you can always reach me on Twitter. So generally I do respond to everybody. I do not differentiate. Even person says that I have only 1 lakh capital, I still respond. That's absolutely important. So one second. As you do triangle, which parameters you consider intraday basis? So Venkatesh, do watch my couple of my videos, right? Live streaming, not live streaming. I also did couple of videos. Check that, and then you will get some answers there. It's very difficult for me. Difference between strangle and iron condor, both are, yeah, kind of same. Iron condor got the hedges. Strangle doesn't have the hedges. That's all. But I always said 100% you should do hedges. It is as simple as you wearing a seat belt when you're driving a car, and you're wearing a helmet when you're driving a bike. Without that, do not do that. And then Tyagarajan, great, thank for answering the question. That's fine. And then I am from Kurnool. I visited Kurnool many times. I have friends there. And in fact, I was there last Monday in Kurnool, traveling back from Hyderabad. By the way, Sai Tajeshwar Reddy, Sai Tejeshwar Reddy, I like Pulla Reddy sweets. I did buy some things in Kurnool. Twitter ID Divya, Twitter ID is same adoption seller 100. Obviously, that's not my real name. Hyderabad में training की थी. Great to know Harpreet, much appreciated. And what motivates you as well? Demotivates you when it comes to trading? Yeah, I mean trading I enjoy. To be honest, that gives that adrenaline rush, right? So the thrill. So for me, it's not losing or making money, but then if my strategy works, I feel happy. If strategy doesn't work, obviously I would not be very happy. So where do you stay in Bangalore? I stay in Harluru, very close to HSR. But we have a house in Whitefield. But yeah, we do not live there right now. How old are you and what kind of work that you do? I work in IT right now, but then I might probably quit that corporate job and then try to get into startup very soon. I'll let you know when that happens. If doing option selling, it is it better to do with or without pledging and then using the margin? Is it wise to buy ATH? And so option selling, I always suggest OTM. And always pledge. Without pledge, do not enter into option selling. The reason is one bad move would wipe out your entire capital. So always have the hedges. Hedges would save you. But yeah, and ATM I would not suggest. It is always good to do OTM. Wish you success. Thank you, sir. And for hedging, supposed. In fact, okay, I see. Stay in Whitefield. That's great, Sham. Much appreciated. We sell 50. So how much premium we should be? It's up to you. We can do 30. You can do 20. It all goes with the risk appetite. There is no standard one. But sometimes I do hedges mainly for the margin. Sometimes, again, it all goes with your confidence, right? So if you think that it's going to be directional, you will do close by hedge. And if you think it's going to be flat, you can probably do hedge for the margin, not that for the anything else. All right. I think we have some more questions, and let me answer. Current week strikes are next week. Which one is preferred? I think this is a probability model, right? So current week, you will have the probability is higher. Obviously, when the probability is higher, premiums are low. Next week, the time decay would be less. This week, the time decay is more. So you can do, if you're in doubt, you can do 50-50 here and there. You will be able to really make some money there. Option selling has one cons, which where the loss is unlimited. Yeah, absolutely, the loss is unlimited, obviously. So that's the reason you need to have hedges. All right, I think this is a very, I feel a very engaged audience, and I also learned quite a bit. That's very important. And I'm glad that I could answer a lot of your questions. So, what is time now? Oh, time is flying quite fast. 12 o'clock, which I didn't realize that 2 hours we spent. So I think probably we should wind up right now while I'm free. But anything too much will. Okay, let me answer Samir's question. I'm profitable in directional option selling, but have large losses in option buying with only 5% left. And should I focus solely on? I think my suggestion, Samir, pick up something which works for you, your trading style, and then if you're making money in option selling, let it be. And my suggestion is do not compare with anyone. And see, suppose if you are 5 lakhs, right? I think the moment you should only look at probably going to 5.5 lakhs or 6 lakhs. And just because somebody is making money, let's say 10 lakhs or whatever, do not compare. I think it's all about you being better yourself. That's what, which is a lot more important than anybody else. So I think any strategy that is giving you consistent money, you should follow it. That's all I would say. So you should continue to do whatever you are doing, and do not get misled by the people who would say that okay, you would make money by doing some strategy by, because somebody, one of my friend lives in Qatar. He called me and said that there was a algo. Somebody sent a WhatsApp message saying that okay, I do this algo, and then I can make you to get about 30% each week 30%. So which basically if you invest 10,000, you would get about 3,000 in a week, and then in a month you would probably double it. So the person actually called me and said that I want to invest it. I asked one simple question, right? So if somebody is making so much money, it's a matter of they go into bank and then get some 1 crore, whatever the collateral, right? So he put that 1 crore and then get that 1 crore in a month and then pay back to the bank, and then live happily forever. So, and each month you will get one more crore, and that's all. So do not fall into some of those things. It's absolutely scam. And if somebody is telling you that even if you are able to make 5%, 10% in a week, do not, or a month, even a month, right? It's not possible, I can tell you. So it's all about so money making is not easy. I must tell you, it does take years. It does take a lot of patience. If it is so easy, the world, everybody would have been so rich, which is not the case. It is not easy. So do not fall into some of those. Yesterday, in fact, I did not remember, somebody in Twitter posted saying that if you do option buying, you need to, if you wanted to make 10,000, you need to have 1 lakh capital. If you want to make 15,000, you need to have 3 lakhs, something like that, right? So I felt it is not possible. If it is so easy making 10% each month, none of us will have to work, right? So everybody will do trading, which is not the case. And then also you need to remember, for every person who is gaining in the stock market or the options, there is 1 or 2 persons who are losing. So there are always people losing money. It's not just people are just earning money, right? So those things you need to be very careful. On Sensex, you made 3% on Friday. I think, how did you manage this? I think Sensex, maybe I'll explain the trade. I did not really do the video, but then let me explain the trade. So I did not log into this one, which is at say kite here, but then I will quickly explain the trade because you asked. So Sensex on Friday was a little tricky. Let me go back to 15 minutes candle, right? So yeah, it is pretty much opened 81,000, and it reached bottom somewhere here, right? And then it did not go beyond 80,000. So at this point of time, I kept on selling PE, which is 80,500 PE. So original price when I started was 67 rupees, and then yeah, I think somewhere here 67, and then the time decay would happen, right? Even when it reached here, it never reached back 67. I think it pretty much stayed around 58 or whatever. So when it is falling, I kept on selling PE, and 67, 58, 40 or whatever, right? So, and then I kept on selling, let's say 500 stocks, rather 500, not the lots, but the quantity. And then when I see a reversal here, it touched here and it moved back, and then I started making money. But then I also started selling on the upside, which is about 81,500. And eventually, when there is a downturn here, I started moving the CE close by, while I kept the 80,500 PE intact. But then I started moving a lot more closure when they started moving up. That's what I did. And it's very difficult to explain here, but then it's basically selling the PE when it is falling, and then the selling the CE when it is rising, and then making the adjustments here and there. That's how it is. All right, so that's Mr. Tyagarajan. This is the question that you asked, I think. See, I think from the psychology perspective, right, when you start making money, what would happen is you would end up taking, your mind says that, okay, go on and do Samir. So that's what the mind says. So because you are so confident. So now you end up taking a lot more risk. Earlier, probably when you have zero losses with zero profits, right, you would probably put very strict stop losses. You will be a lot more careful. But when you are in profits, your risk appetite will automatically reduce, because it's not your fault. Your brain actually says that go on and take the risk. So that's where it happens to everybody. So that's where you need to be a lot more cautious. All right, then I think okay, delta has any of course, yeah, delta is basically the time decay, right? So it has a major role in time option selling. Absolutely, that is the edge with the option selling, right? So you get the time decay and you would make money. Damodara Kannan Rajgopal, I joined a bit late. Do you have any monthly positional trades, and which indexes do you prefer? If you do, when so I did cover the. You can probably watch this video a little later. Damodara Kannan, and I did share the September trade that I'm doing, and then I promise that I hope my private stay understand my promise. I will actually do weekly video as soon as I made some adjustments. So. My bad. Yeah, that's right. You were right. So, as I said, I do not follow the Greek, so I get confused. But that's right. Time decay is the one. Whatever theta delta doesn't matter. Yeah. Sorry about that. All right then. I think we are 12:07, and then we are left with about 46 people online. I think that is a good number. And there is definitely stickiness. So I can stay till 12:15. If you still got any more questions, you can ask. But otherwise, I'm okay to stay till 12:15. After that, we will wind it up. Any other questions? Do you believe in? Absolutely, I do believe in open interest, because that's definitely. I do track that pretty much daily. In fact, I do strongly believe open interest actually works for stocks more than the this one, right? So as I said earlier, I did this one 3,000 straddle starting of last month, which was giving almost like 36% returns, I think. But I have exited in the middle because I wanted to clean up the positions that point of time. I exited about 1.5 lakhs profit, I think. But yeah, I think open. In fact, if you take HDFC, right, it will give you very good insight to you. Let me show HDFC. So HDFC, if you take, right, it is actually the maximum showing 17,000. And then generally, if you look at HDFC, it never, very rarely it crosses this number. Let's go show HDFC here. Oops, where is HDFC? All right. So if you take HDFC, let's look at all-time high. All-time high is about 17,000 sorry, 1,000 800, you can say 17. And also if you take, right, so 1,700 is very rarely it crossed, only once it crossed. Now if you go to open interest, right, it actually shows this is the highest one, and then you have some puts here. But ideally, if you have to, let's even if you take 26, right, it is still 1,700. So I simply, in this case, I would go and then do CU only, nothing else. I also have a good number of HDFC positions, so I'm not much worried. So I simply go on and sell this option and then leave it there. So now this is basically 50,000. You get about 7% returns in a matter of 1 month. Again, there is no guarantee in life, but then this is what it is. Let's say if it is actually slowly moving, right? So typically what I do is I go on and sell this put also here. If it is coming closer, let's say if it crosses, right now it is about what is the number, 1625, right? Let's say it goes to 1650. Now what I will do is I will go and then sell this put here. Um, Not here, here, sell this put here. So now what happens is you will be able to protect your losses in case if it actually comes very close to you also. So you can do that. It's I mean, without simulation it's difficult, but then some of those things you can definitely do. But I think my view, some of these open interest based things will give you a lot more advantages. So HDFC, there is a good resistance here. If you take Reliance, 3000 or the 3100, even if you go to 26 September, right? So you still get better off here. So September, anyway, there are no results. Any of these companies going there is going to be very rare. So you can definitely go on and do stocks also. Even if you take, let's say, Infi, for example. So Infi, again, 1900. If you take 26 September, you got, let's say, 2000. And Infi, 2000 never reached it. I think that's not even all-time high. Infosys. Let's look at Infi, not there. Oops. All right. So if you take Infi, so Infi all time is only here, 19,000, 1900. Sorry. So you go on and simply sell this call option. You are still better off. So 2000, if you do September, let's say do a trade, Infi, build a call option 26 and then 2000. This is 5%. So good money. So I mean, this looks very easy, but then obviously if you will get confused when it is moving close to this, right? So those times you need to be cautious. No, I do not do ADR and ATR, so I do not use those indicators. What are the indicators that I use? I had shown already. Nothing else I use beyond that. Okay, so how are these injections are made? It's very easy. So typically, if you take Sensex, right, it is usually done by HDFC or this one, right? Reliance, Sensex or Nifty both. If you really go on and look at HDFC here, for example. 1 minute. So you can say HDFC quite volatile on Friday, mainly because there is a expiry, right? So this is 1 minute, but then let's go to 5 minutes. Yeah. So this is quite volatile compared to, you can see the previous day was not so volatile. You can see this long candle. So now HDFC Bank, if you see, right, this is the longest candle that you see at 9:15, and then if you go to Sensex, that is the longest candle that you will see here. So somebody can just operate the HDFC, and also you can, if volume is not here, but then they just need to move HDFC from, let's say, how many points, how many rupees here. It's basically, yeah, it's basically 5 rupees, 8 rupees here, and high is 33, and the low is, yeah, it's about 8 rupees. But then the 8 rupees on HDFC would result into Sensex close to 300 points. 300 points, yeah, about 300 points. So that's how they do operate. And then my observation, mid cap Nifty is managed by India Hotels. So again, this is my observation. So India Hotels. India Hotels. Yeah, this one, India Hotel. You will see this would be very, very volatile on Mondays, not on other days. So I think Friday you would have seen mid cap Nifty quite volatile, right? You got to see that. Last Monday I did not trade, but then I did not trade mid cap Nifty, and mid cap Nifty you can see this would actually absolutely mimic the mid cap Nifty that day. There is quite a bit of volatility that day. So I think if you have some 1,000 crores, you can always manipulate the market. I think none of us have that money. And option future role. No, I do not do futures, Damodar. Thanks, I appreciate your knowledge. Thank you, sir. Which is your favorite? My favorite strategy is CE only. CE only, which I kept on selling CE. That made gave me good money. Monica, sir, next time when you do covered call, please record and share if possible. Definitely, I will do that, madam. All right, I think 12:15, and I wish you a great remaining Sunday, and then happy trading next week. And I will go very slowly next week because I did meet my target. And thanks for spending time with you, and then have a great remaining day. And okay, we have some more questions. So I think Samir, you need to come to Bangalore to meet me in person. I think you have a lot of questions. Uh, where are you based out of, Samir? Which city you live in? Surat. My brother-in-law stays in Surat. He works in Kripko. When I come to Surat, I will definitely meet you. Uh, all right then. Okay, let me answer. Surat, Samir got. I sell options in spikes and continued adding my position until I reach my full quantity. Once I have a place to sell the. Agree. I think this would work on an expiry day. The reason is you also get the advantage of time decay, right? So that's the only thing is I think out of 10 occurrences, probably 2 occurrences or the 3 occurrences, it might probably hit you hard. But otherwise, if you're able to manage that well with a good stop losses, that is still a great strategy. I think I will tell you, I did make my highest profit on a CU only. This was back in May first week, I think, about 33 lakhs in a single day, 32 lakhs, I think, on a Finifty. That works very well. But then, as I said, there would be days where it would really hit you hard and you would end up losing money. All right. Thank you, Harpreet. And I love Chandigarh, both for the food and also the infrastructure and other things. And when I come next time, I'll definitely catch up with you. All right, then. Have a great remaining day. And then nice meeting you. And then we'll definitely catch up next time. Bye bye.